Well, hi there folks, it's Matt Hayson here with plenty going down in the property market this week. That is for sure. Of course, the biggest headline of the week in property was, of course, Miss Bullock, the new RBA governor, pulling the trigger and lifting the cash rate from 4.1% to 4.35%. Now that's the 13th cash rate increase we've had in 18 months, and it's a long way off Miss Bullock's predecessor, Governor Philip Lowe's now infamous forecast that the cash rate would not be lifted until 2024. Now, if you have a $750,000 mortgage, you're currently paying an extra $1,815 per month in this lifting cycle. Miss Bullock has said that the war against inflation has not been won and rates could go higher and remain that way for longer. The new head of Westpac and former RBA economist Lucy Ellis has also suggested that the RBA now under pressure to potentially lift the cash rate several more times. But what's very interesting about that particular comment is just on October 24, published in the Australian Financial Review, Miss Ellis and the Westpac team of economists had suggested that the cash rate would remain stable until June of next year, when they then thought that the RBA's next move would be to cut the cash rate, and they forecast that the cash rate would fall to 3.1% in 2025. So in the space of a week over at Westpac, they thought that the cash rate would remain stable, and then a week later, they are now suggesting that the cash rate could be lifted several more times. It seems in a week, in the world of economics, anything is possible. Now, speaking of economists, they've come out and suggested with this latest cash rate increase that there will be no crash, just potentially a bit more of a slowdown. Now, a bit more of a slowdown leaves a lot open to interpretation. Does that mean fewer sales? Does it mean softening in prices? Well, one of the best in the business, Louis Christopher, has suggested that there just will be more caution in the market, and that's a very true statement. We've actually seen that unfolding over the last month or so as listing levels have actually increased. But the head of CoreLogic, Tim Lawless, has said it's pretty hard to see any price declines unfolding in the near term. So we'll just see how that plays out. Now, looking around the grounds of what we're experiencing down at the coalface is still a pretty mixed bag of results. The final auction clearance rate last week in Sydney was sitting at 50.8%, which would reflect that there's a real arm wrestle on value between buyers and sellers, and that was before this latest cash rate increase. So sellers will need to really sharpen up their expectations in order to get a deal done, and buyers will still need to remain fairly sensible because the bottom's not falling out of the market whatsoever. In fact, we're still seeing really good foot traffic attending our open home inspections. So really it's coming down now to a value conversation between buyers and sellers to get a deal done before Christmas. Now that leads us into this weekend, folks, where we do have some amazing properties open for inspection. And thanks so much for watching. I'll catch you all next week.